Hello and welcome. This is the Market Wrap. I'm Agam Vakil. Where we've seen weakness in the Indian markets, and we have seen further declines as far as the benchmarks are concerned. The Nifty coming off by as much as 80 points and below the mark of 11,900. 11,856.8 to be precise on the Nifty. And while there's very few stocks, in fact only 4 stocks on the Nifty advancing by over 1%, we don't have too much to go on for here. On the losing end, we have Yes Bank declining by around 10%. We're going to talk about that in just a bit. Z Entertainment, GAIL, JSW Steel, Bharat Petroleum along with Power Grid declining quite substantially. The advanced decline ratio on the broader markets isn't very encouraging either, and it is actually worse off than what we saw yesterday. Today we have nearly one gainer for 4 losers on the NSE 500. New India Assurance along with eClerx Services and JB Chemicals looking at some amount of increase in prices, but on the losing end we have some usual suspects, which may include something like a PC Jeweler, or for that matter something like a Allahabad Bank or Reliance Capital. But we also have weakness in IIFL Finance, which did see strength of late. JSW Energy, Viatech Vabag, and Thyrocare Technology also declining in trade. But now let me get in our markets editor Neeraj Shah for his thoughts on the markets today. Neeraj, how are you reading into things? What are you making of it?
Yeah, well, a tough day today, Agam.
Yeah, certainly.
And clearly almost everything participated. We were talking yesterday, maybe TCS will not participate because after it retreated a bit, but that did too.
Yeah. And
save for the small gains that we had in the heavyweights like HDFC Bank and ICICI Bank, a bit of pressure. The market breadth also not that great, and volatility came off as well. It's been very interesting the last few days. Market has gone up and VIX has gone up. Markets have come off and VIX on that days come off as well. So slightly intriguing the last few days, 3 or 4 days, but a clear downward bias. And let's see, I mean, no other cues aside of the fact that if indeed the Fed does something and the world markets cheer that, or if we reach a tariff deal and the world markets cheer that,
right,
then we may have a bit of salvage. Otherwise, no apparent reason, just that there's some bit of profit booking that is clearly happening. And one quick thing, Agam, before we find out, at least before I go, is the kind of corrective moves that we're seeing in some of these higher valued stocks like Avenue Supermarts, HDFC, AMC. Bajaj Finance has already done that. Despite the fact it's up 1%, it's retreated from 4,300.
Right.
So a lot of these stocks have come off. Is the shift finally happening?
Right, that's a question. Well, Neeraj, thanks for that perspective there. So that's as far as you have it here in terms of the news on the benchmarks. But let's shift focus to a bunch of stocks, and I'm going to start off by the biggest loser in today's day of trade on the Nifty 50, and that's Yes Bank. Now, until yesterday, we had certain parties. Well, one of them from Canada, Ring Singh Bridge, who was interested in buying stake, even as Yes Bank moved in to raise funds. This was to the tune of $2 billion, and where Arvind Singh, along with the partners in Hong Kong, that's SPG, were looking to contribute to $1.2 billion. But yesterday we had news that there's a likelihood that the board meeting that the Yes Bank is in today is expected to reject that offer for now. And that's the reason why we have seen quite a sharp drop in today's day of trade for Yes Bank, and moving back to the levels of around 50 rupees per share, declined by as much as 10.5%. So volatility has returned to Yes Bank, and as for its share or rather fundraising plans, it's going to be a wait and watch as to how it intends to go about it. From Yes Bank we move on to another bank, and I'm going to talk about SBI, and in this case I'm going to get in Shefali Malik to talk to us about that. Shefali, what do you have for us?
Well, the divergence for FY19 was reported today, and the divergence in gross NPAs was to the tune of 11,932 crores, which is about 7% of what they actually reported for FY19. Divergence in net NPAs was the similar amount. Divergence in provisioning was to the tune of 12,000 crores, which is about 11% of what they reported. Remember, as per RBI's requirement, divergence of over 15% in gross NPAs is supposed to be reported. And however, as per the recently introduced SEBI norms, banks will have to make disclosures if the divergence is more than 10% of its pre-provisioning operating profits. Now that percentage works out to be 22%, which is higher than the percentage prescribed by SEBI. And the reported PAT for FY19 was 862 crores, and the adjusted PAT after taking divergence, after taking all these divergences into account, was a loss of about 6,968 crores. But more or less probably factored in by the analyst fraternity, and also the fact that the management has been pinning down hopes on the recoveries, and SR Steel case has come to a close resolution process.
Right.
So all that adds up to the numbers of SBI, which we will see in Q3 earnings this time.
Sure, fair enough, Shefali. Thank you so much for getting us those details on SBI and the divergence there. And finally, let's perhaps end on a positive note. We've had some good news from the insurance sector, and we've had some numbers actually, and I am going to get in Forum Butt to talk to us about how the listed players have done for the month of November.
So Agam, so the life insurers registered a strong premium growth this month, post registering a subdued performance in the last 2 months. The industry grew by 41%, while the private players grew by 31%. It was LIC which clearly stood out this month when it registered a premium growth of 49%. So favorable base and sale of traditional products is something which drove the performance for the companies. Looking at some of the private listed players, SBI Life registered a growth of 32%, followed by HDFC Life at 31% and ICICI Prudential at 24%. It was, however, the non-listed private players which reported a strong performance in the premium growth, when Tata AIA Life Insurance reported a 76% growth in the premium. Looking at some of the factors which worked out well for the companies, LIC's growth was driven by sale of traditional products. For HDFC Life, growth was driven by launch of a new participatory product in the Sanchay series. ICICI Prudential launched a new term plan covering disabilities, which worked well for the company. SBI Life's growth was driven by large sales of retail policies. So on an overall basis going forward, it is expected that the industry will register a strong performance in the second half of this financial year.
Okay, Faram, thank you so much for getting us those details on the insurance sector. Hopefully that is a silver lining for the markets, which are otherwise very, very weak for now. Well, we'll continue to give you updates on how things are panning out, and I will be watching out for the fund flow numbers as well as to how things have gotten down with respect to foreign institutions as well as domestic institutions. But on that note, it's a wrap on the markets, but there's lots more lined up. Stay tuned to BloombergQuint.